Here we have the transactions starting themselves. Notice that there's a date on each transaction. You can look for that date, and that's going to be the date that you use for journalizing. You have to look at each source document and determine who is the buyer and who is the seller. In this case, Griff's Feed Store is the seller, and we, Pony Rides To Go, are the buyer. Here we are buying one pallet or truckload of feed, and it has a total cost of $420. Notice that on here are terms. If you see anything with terms, this is a purchase invoice with terms, means that we are buying this on account. We are not paying cash today on November 1st. Now there's another thing that you need to know. Pony Rides To Go is feeding ponies and horses, and horses happen to have a very delicate digestive system, and if there's any amount of mold or anything like that, it can cause them to have a condition known as colic, which can lead to death. So we have to be very careful when we're feeding horses and ponies. We only get a certain amount of feed at a time. We can't get months worth of feed and then slowly feed it to them, because something's going to end up getting moldy while it's stored in the barn. So we only get a certain amount of feed at a time. Because of this, we are using the feed right away. Whenever we use something right away, that is going to go straight to expense. If I'm buying, say, barn supplies, which is like fly spray and stuff like that, for the ponies, then that will go into an asset called barn supplies. And then slowly we use the barn supplies over the next several months, and we will do adjusting entries for that. But when you have something like feed that needs to be used right away, we're not going to put it into an asset and then slowly use it. We're just going to put it straight to the expense. Okay, and so when I think about what am I going to debit and what am I going to credit on this source document, we're receiving the use of feed, and we're giving up, not cash, remember, we're giving up the fact that we owe out to vendor. So we're going to end up debiting feed expense, which is on your chart of accounts, and we're going to end up crediting accounts payable, the liability, because we owe out to Griff's Feed Store. When on the next transaction you see a sales invoice, okay? Now here, who is the buyer and who is the seller? Here we are the seller, and Windy Lane is the buyer. This is dated November 2nd. Okay? Now on these sales invoices, this is what we give to the customer when we actually do the pony party. So they book a pony party ahead, and then we actually bring the ponies to their place and do the pony party for their children. And when we're done, we give them this sales invoice. Now, if they've talked to Camille ahead of time and gotten it approved, they can pay for their pony party next month. Otherwise, it's due today. We hand them the invoice, and they have to write us a check or somehow else pay for it. If it is paid today, the invoice will be marked stamped paid. And that means that you know that we received the cash today on November 2nd. So on this particular sales invoice, we received cash. What did we give up? Well, we had to haul the ponies there, and we had to do this pony party. We had to provide our services. We sold our services. And so we're going to use a revenue account called sales-pony parties. And that will be for $610. So I'll be debiting cash and crediting sales-pony parties. Now, in addition to putting this journal entry in, since this journal entry involves cash, whether we're receiving cash or paying cash, this journal entry involves cash, unlike the first journal entry, which did not involve cash. Every journal entry we come to that involves cash means I also need to put that on my check register. You can see the video for Pony Rides to Go Part 3, in which I will talk about the check register and how to put this on the check register. But remember, every time you have cash involved, you have to put the journal entry in your journal paper, and you have to put that transaction in the check register. In this next source document, this is a check. The check is being written from the Small Business Administration to us, Pony Rides to Go. So we are receiving this $4,000. What are we giving up? Well, it's down here in the memo line of the check, a small business loan. So we're going to have to owe out to Small Business Administration for that. Here's another sales invoice like the one we had previously looked at. This one, however, notice it does not say paid stamped on it. It has pony party balance due December 4th. Okay, so that's telling us right there that this is one that was okayed by Camille to pay later. So this, we're not receiving cash today on November 4th. This is one where the customer owes us, is what we're receiving, and we're giving up the fact that we sold services. So we'll have to debit accounts receivable on these and credit sales-pony parties. This next transaction involves payroll. So you will need to see the payroll register. On the payroll register, it's all filled out for you, showing everybody's hours and their gross pay, their total deductions, and their net pay, and that's all totaled for you. You need to debit the gross wages into wages expense. You need to credit the total deductions into payroll taxes payable, and you need to credit the net pay total into cash. You need to have, and your explanation needs to show all three check numbers in the explanation. Also remember, this involves cash going out, checks being written. It needs to go on the check register as well. Finally, whenever you have a payroll journal entry, you have two payroll journal entries that will both be dated November 6th. The first one comes from those totals, just like I just finished telling you of the payroll register. On the bottom part of the payroll register is calculated the matching of the FICA, the Social Security and the Medicare, and the calculation of the FUTA and the SUTA, and totals that all up into one number. That's the employer costs, and you will have to debit payroll tax expense and credit payroll tax payable for the employer costs every time you do payroll. That journal entry does not involve cash. We have to pay those amounts in the future to the IRS. We owe out to the IRS, and so we credit payroll tax payable for that. Does not go on your check register like the first payroll entry. This transaction here is where Be Happy gave us a check for $380, and we see that's payment from last month. So we must have done a party for Be Happy last month, and now that customer is paying us what they owed us from before. As you go through the rest of the transactions, you need to analyze each source document as to who is the seller, who is the buyer, who is the person who's giving up cash or receiving cash, and does this even involve cash, etc. And make your journal. I would, if I were you, write on each of these source documents my analyzing, so that I know what I'm going to debit and what I'm going to credit. Then I would put the journal entries into your journal paper, and if it involves cash, also put that on your check register.